Behavioral economist Katy Milkman studied gym check-ins across thousands of people and found something strange. People were far more likely to work out the Monday after their birthday than on any random Tuesday, even though nothing about their body or their schedule had actually changed. She called it the fresh start effect. And it turns out the wealthiest investors have quietly been exploiting this same effect every single morning in under 5 minutes for decades. Most people assume successful investors win through better analysis, better information, or better timing. Those help. But researchers who study trading behavior keep finding the same pattern. The investors who consistently outperform aren't the ones with the best predictions. They're the ones who make the fewest emotional, in-the-moment decisions. And that discipline isn't willpower, it's a ritual, done before the market even opens. Here's the mechanism behind it. Willpower researchers have shown that self-control isn't a fixed trait, it's more like a battery that drains throughout the day. Every decision you make, what to eat, what to wear, how to respond to an email, uses a little of it. By 2 p.m., when a stock suddenly drops 8%, your battery is already low, which is exactly when panic selling happens. The investors who avoid that trap aren't more disciplined people in general. They just make their important decisions early, before the battery drains, instead of in the middle of a stressful afternoon. This matches a pattern seen far outside of investing, too. Judges, of all people, have been shown to grant parole far more often early in the morning than right before lunch, when decision fatigue has quietly worn down their judgment. Nobody would say those judges became worse people by 11 a.m. Their brains simply ran out of the same finite resource everyone runs out of. Your portfolio decisions are subject to the exact same biology. The actual habit is almost embarrassingly simple. Every morning, before checking a single price, they spend about 5 minutes rereading their own investing rules, written by their calmer, more rational selves weeks or months earlier. Things like, I don't sell during a drop of less than 15%. I don't buy based on a headline. I hold for at least 3 years unless the fundamentals change. Reading this before the market opens does something powerful. It lets your rational morning self set the terms for decisions your emotional afternoon self might otherwise make alone. This is also why the fresh start effect matters so much here. Milkman's research found people are more motivated to follow through on commitments right after a symbolic new beginning, a new week, a new month, a birthday. A 5-minute morning ritual manufactures that fresh start artificially every single day, instead of waiting for New Year's to get serious about your money again. You're not relying on motivation, you're front-loading the decision before your willpower has a chance to run out. Compare that to what happens without the ritual. Traders who react to every headline in real time with no morning anchor show measurably higher rates of impulsive selling during volatility, according to behavioral finance research on retail investors. Same information, same market, wildly different outcomes based entirely on when the decision actually got made. Here's how to start tomorrow. Before you open any app, spend 5 minutes writing 3 simple rules for how you'll react if things go up, down, or sideways this week. Read them again each morning before doing anything else. You're not predicting the market, you're just making sure today's decisions get made by your calmest self, not your most tired one. If building wealth through psychology instead of guesswork is your thing, that's exactly what this channel is for. Subscribe so the next 5-minute habit finds you before the market does.